At VEF, we don't normally do early stage or seed investing, but we do make exceptions in exceptional circumstances, and this is clearly one. 5 years on, we're very happy with this investment, and I'm very happy to introduce you to Omair and his story at Abhi for the first time.
But the idea for me was very simple. I came out to the region. I was living in New York at the time, and came out to first to Pakistan to try and actually first look for an investment opportunity. And came back to New York. We got on a call, and then we met, and I said, "There's nothing really out there." And then that's, I think, to be fair, where you kind of threw it back at my side, and it was, I think, I was waiting for that kind of pull mechanism to come in, and said, "Well, if no one's doing it, why don't you go and build something?" And so, yeah, that's kind of the beginnings of the story. At least I got scared a few times in between, got cold feet, didn't do it, and then eventually did it. And so that's kind of the backstory, my backstory at least, and how I jumped into building
Love
Abhi.
it.
After the many years of at least on the investing side, um, what was very clear was that credit-led fintech was something that was very important and scalable, and what was really required in a lot of these markets. And the truth is that a lot of firms do not service the segment that truly need it in those emerging markets. And so that's the genesis of Abhi, is saying we wanted to go out to be able to build the neobank for the under and unbanked across markets, but starting off with Pakistan. So the problem was very clear. The problem was that individuals and businesses, and at the beginning it was just individuals that we focused on, have a huge problem when it comes to accessing credit. You look at credit penetration to GDP for Pakistan alone, it's sub 2%. You look at the amount of credit cards that are in the country, uh, considering the size of the population, which is about 240 million people, with an addressable audience of, say, around 80 million people. There's only 500,000 unique credit cards in the entire country. Um, Bank accounts were solved for, in my opinion. I think you had, though everyone says they don't have bank accounts, they have wallets. The telcos did a very good job at that. And it wasn't the previous decade where that didn't exist. Wallets existed, infrastructure existed. So for me, payments was not the pain point. The pain point was getting access to credit. But how do you do that properly without being blown up? Because giving money is easy, but it's about being paid back. So the problem set that we wanted to focus on was credit. We knew who our target client was, and we said that this is where we wanted to focus. So the idea was focusing on individuals and businesses that cannot get access to credit, and how do we basically build for them. So as I mentioned, we started off in Pakistan as a pure EWA player. Why EWA? Simply because we thought a manual pain point that exists in the country is much easier to digitize than going out and trying to educate a populace of a new product. Copy paste doesn't work in emerging markets. You have to go in and solve for something that is a pain point already, and then allow them to be able to upscale into other products. So EWA, Earned Wage Access, was our key first product, which allowed us to go from an idea to allowing individuals through businesses to access the salary as they earn it. This was important for a few things. One, it created trust, which is very important when you are going down the credit line. Even on the other side, they don't want to just borrow from random institutions or people. Also, from our side, it was very important to be able to close the loop when it came to being able to be paid back. So B2B2C, going through businesses and allowing their employees to be able to access their salary as they earned it. We then expanded out. We knew that Pakistan was a very important market to us. It remains a very important market to us. However, we wanted to make sure that we had geographic diversification from a revenue standpoint, because one, when tide turns in certain markets like Pakistan, Egypt, Nigeria, for example, it can take decades before money comes back. Second, from an operational perspective, it was very important for us to dollarize revenues as well, which allowed us to be able to scale into international markets. So our first foray was into the UAE, and shortly thereafter we also launched in Saudi. and have been able to scale the business fairly well through these three markets we're in, and soon we'll be launching in Oman as well. Now, a key aspect over here, which is counterintuitive, and actually before starting the business, it's something I probably said I would not do, was going into different markets too early in your journey. But for us, being from a much more cost-effective market like Pakistan allowed us to be able to leapfrog ourselves in terms of our growth into the GCC, given that we had a high operating leverage that allowed us to scale without having too much of a workforce in those different markets. So we took our products, and that's the beauty of software as well, and working with regulated partners to be able to go into the other four markets that we're about three markets now that we're going in. So it all comes down to numbers. And I think this is where, over the last 5 years, if you ask me, this is where we would be today, I would have laughed out the room. And it's scary still today that we are here and we're still growing and knock on wood, doing well. We remain profitable. We are now doing over $85 million in revenues on an ARR basis. We have a full regulated banking license in Pakistan. We have lending licenses across our different markets as well, whether it be in UAE, Saudi, and soon in Oman as well, where very soon we should hopefully have the first digital banking license there as well with our partners. And that's something which has been very key for us. We've been very focused on regulation and credit being kind of our moats. Everyone is trying to push on the asset light aspect of things, but the truth is, when you're building a business at scale in fintech, I think it has to be the opposite. It needs to be regulated and asset heavy. So we've got a very large portfolio size now. We've done over 6 million loans since then. We have over now, I'd say, close to 2 million bank accounts across all the countries that we operate in, and the pie is only growing. The point is the gap still remains very large. We've barely scratched the surface. Though we're doing 85 million plus million revenue, though our book size is north of $200 million now, the truth of the matter is we are less than 0.2% market share of what we can actually achieve. One thing through YC they tell you is like you should not build a company if you do not believe that with 1% market share you cannot build a $1 billion company. And the point is, with credit-led fintech in emerging markets and the markets we're focused on, the pie is massive, the penetration is minimal. We can have numerous competitors and we can still build ourselves into a $1 billion business. So we still have room to grow. I hope that we should hopefully have the same conversation in a couple of years' time, and we should be 3-4 times the size of where we are today and still would have barely scratched the surface. And that's the whole point. So we are now a diversified platform, neobank, doing everything from earned wage access, digital banking, gold-backed lending, remittance services through lending, through a send now, pay later program, to helping businesses with all their working capital requirements.
Look, I think we're at a wrap, Omair. What I'd like to say is thank you for your time. You know, obviously taking time out to do this for us and our investors. And it's a first. After 5 years, you should have done it before. But now you're on the radar. They will see this. They'll come at me. They'll come at you with questions about your story. Because I see you as a bright light in our portfolio, which is what I wanted to do. With this interview. But also thank you for the journey so far. All the work. I know it's non-stop for you and the team. And the value creation you've done for us as investors from that first check that we did 5 years ago. But thank you, and we will talk again soon.